In today's update, we will discuss the weekly outlook and if Bitcoin will attack liquidity above 69.5 thousand, propelling it to new all-time highs. Or will Bitcoin rather save a new all-time high for later day, trap late longs and resume the correction much lower? If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. The week closed on a positive note, with momentum to the upside again resurfacing on the back of persisted corrective price action throughout the prior week. Price has now made 3 attempts to retest the 68.5 to 68.8 thousand zone over the course of the prior week, where it was successfully defended by a supply wall, sparing liquidations above 69.5 from being triggered. Following the most recent rejection early in today's London session, price is currently consolidating into the New York weekly open. Noteworthy, the retrace from the prior impulse to the local 69.5 thousand high was relatively shallow, this symptomatic of impulsive price action and strong sentiment. However, the shallow retrace in the context of lack of follow-through on increasing volume and recent accumulation of liquidations above the 69.5 thousand zone increases the probability of a swing failure pattern and resumption of corrective price action lower rather than continuation to new all-time highs. The market backdrop is supportive as indicated by crypto greed and fear index in greed. Also indicative is futures open interest making new all-time highs and a positive perpetual futures funding rate. On-chain metrics show the potential for a tailwind to valuations, with all cohorts of short to long-term holders now having unrealized profits and subdued profit taking into higher prices. Volatility markets reflect bullish sentiment with the call-put ratio positive for all expiries and even rising in longer expiries, showing increased optimism of higher prices going into 2025. We attribute recent constructive price action and optimistic sentiment largely to recent developments in the US presidential election campaign, with the market pricing a higher probability of the Trump trade, reflecting Trump's growing lead in the polls and betting markets. Additionally, the absence of significantly negative economic data, surprises, and earnings announcements in the US, and the front-loading approach to looser monetary policy by the Fed also have been broadly supportive to risk appetite and expected liquidity conditions going into 2025. Looking forward, potential catalysts to price action and rising volatility this week exist from significant economic data announcements, namely US employment data on Friday. On the follow will be the highly anticipated US presidential elections on November 6th. Also in focus are elevated geopolitical risks with flashpoints in the Israeli-Iran conflict, escalating in frequency and intensity over the weekend. In terms of strategy, all things considered, the balance of risks currently exhibit high dispersion due to binary potential outcomes creating elevated left and right tail risks. This being said, strategy implications warrant caution and patience in terms of near-term directional conviction and scaling of positions going into the US elections. Our model's translation of market structure, liquidity, volatility, and time-price volume relationship to algorithm logic projects higher prices going into 2025 with the interim trajectory of price more likely to be corrective in nature. This being said, we view tactical short-term directional trades to have low risk-reward and are looking to more compelling, longer-term oriented higher R-factor long setups over the coming weeks. Refreshed levels to where we expect price to gravitate to locally are 69.5 thousand to the upside and to the downside 67.5 thousand. If there is a breakdown in price and resumption of a deeper correction as the week progresses, points of interest to which we may look to scale into longs are 64.6 to 65.4 thousand, 62.8 thousand, and 61.5 thousand. As always, do your own research and analysis. Be safe, and good luck in trading.